And the real problem I think we have is one of the real problems, I would say, because there are other problems. But one of the things that you could do in this country, and it would be easy to do, and I know we should really move on this, is to do something about corporate governance. I've been saying that for 30 years. But the truth is that you don't have productivity in this country. The productivity is poor. We keep looking at why. And you have this tremendous wealth gap that is going to lead to certainly lead to some kind of a populist movement. And one of the major problems which could be fixed is corporate America, because you really don't have corporate America is really like feudalism. It's much more similar to feudalism than a democracy. I mean, you think about it. They even use metaphors for it. You have the castle, you breach the castle wall, you put a moat around yourself. So think of the CEO and the board as the feudal lord, and he has the thing, and the peasants are around him. And then he surrounds himself with mercenaries to protect them. And the mercenaries, for want of a better word, are the lawyers. And I'm not saying the lawyers are bad. That's what they do, to protect this feudal lord. And so you have those mercenaries. And then you have his barons that sort of live off of him and help him and do what he wants, and those are the investment bankers. So he has this whole internecine group around him. And even if you had a democracy, even political democracy, where I really have too much to do to get involved in Washington, but you can't remove this guy. It's very difficult to do it. There are a few activists like myself. We'll call us raiders. I mean, even that is a metaphor. They say, "Oh, the raider goes and gets the castle, and barbarians, breach the gate." But you can't remove this guy. You can't.
But how do you pick your targets, especially now in this environment? You do very, very well. Of course, you scored a $757 million profit with this American rail car and this announced merger with ITF Rail Fund, and there's so many others. I could talk about Herbalife. $1.5 billion there. What I want to know is, at what point do you say, all right, I've done well enough to change things that I can back off, and at what level do you do that? I know when you said Herbalife, you said there's an Icahn rule, quoting you, when you make over $1.5 billion on a situation, you sell a bit. That's what you told the Wall Street Journal. So what is the Icahn rule when it comes to going after a company, seeing that either management or things change, and then you cash out?
I'm not trying to be sanctimonious at all, but really, I think what we do, to a small extent, or maybe even not such a small extent, if you look at these companies and you shake them up and you do something about them, you make them more productive over the years. And again, I'm not really looking to boast, but I think my record, the proof of the pudding is in the eating, and my record proves that I'm right, and that if you did something about this corporate structures that we have and the protections they have over now I want to make it very clear, there are many very well-run companies in this country, and I don't bother those guys, or companies that you really don't need anything to do to fix them.
But you do demand, once you do get involved, Carl, you do demand that they move quickly to address stuff. You're not going to sit.
Well, we try to, but you're making a good point, Neil. And this is the trouble with activism. Another problem, that there's hard to be true activism because it's time constrained. You can't be time constrained. I mean, we held our rail car leasing business from 1985 until just last year, but we had nothing in it and sold it for $3.5 billion, and the buyers of that company, of our rail car business, are going to do fine because interest rates went down. And we could talk about that a little later. What I'm saying to you is that if you look at our record and you bought IEP, your annualized return from 2000 has been 16% if you reinvested dividends. Just kept reinvesting the dividends. So if you put the money in the bank, you make 2%. If you put it in an IEP, you make 16% annualized. $100 is equal to $1,640 today. And if you compare that to the S&P, it would be worth $250, 5% annual rate. We made a 16% annual rate. I mean, Berkshire, now I think Warren Buffett's a great investor, but his $100 would only be worth $520 or something like that. We're $1,600. Now, why am I making the point? Not to boast that I'm a great investor. People think I am, but don't, and I don't care. But I'm making the point that the reason I've done so well, and maybe I'm talking against myself, isn't because I'm a genius at picking stocks. You know, there are many stocks that others could look at and I could look at and say, these are cheap, and there's something wrong. What's wrong with this company? And we're going to be wrong sometimes, too. You know, it's a secular change going on. But what is wrong? And you know what's wrong? The CEO and board are not the best for that company, and they should be. Do something with them, make them change their mind, make them do something. And that's as simple as that. And that's what we do. But why am I saying it? And why am I even going on shows and stuff like that, what I do? It is because that's what this country needs. We have to shake up this internecine system that exists between investment bankers, high-priced lawyers, high-priced investment bankers, and the CEO and board that hire them to protect them. Now, the lawyers are very smart guys. I'm not against the lawyers, and they're doing their job, okay? And the investment bankers do what they do, and they're really smart guys. The CEOs aren't as smart. They're just the guys that ran the fraternity in college, and they're good guys, and you like them. But they're not as smart generally, with many, many exceptions.
Well, do you say they're not as smart as the ones who've had run-ins with you because they don't do what you want them to do?
No, I'm saying that just simply what I find is, with many exceptions, that I find that the lawyers that they hire and the investment bankers that they hire are brighter than the CEOs themselves. But that's generally speaking.
That's generally the case. That's generally the case.